Hi traders, it's Roberto and this is the price action video series update. Today's lesson is on retracement patterns using the 1 hour chart. Often when markets have put in its daily range or exceeded its daily range, then around after 11 o'clock Eastern, which is around the close of the UK session, markets tend to retrace. There's no more interest when the market's done its daily range and buyers start exiting their positions. And you can see that in the candlestick patterns. So let me just show you one trade that I took and just recently exited, and that was the trade on USD Canadian. So the market rallied. I first was paying attention to the number of pips, and it put in about 130 pips, and that exceeds its daily range on this particular pair. And then I noticed that around R2, which is a resistance level, a spinning top was formed, which is an indecision candle, which means there's very little interest at these levels, and the markets are ready to pull back, or the bulls have exhausted their rally and the bears are coming in, or there's a lot of profit taking, and you can see this in the candlestick patterns. So the first candle was a spinning top, and that's my first sign, my first signal that most likely this is not going to go up any higher today. It's hitting an R2 level, and it's a color change candle, and it's a spinning top, which is indecision, which is no one is in control of the market at this point. Now, for me to take a trade, I need a candle to close below this spinning top, and there it was. There's this candle here, closed below the spinning top, and then the trade was taken on this pair. Now, I have exited this trade around here, which was the 23% retracement level from the swing low to the swing high. So I was very cautious. It also is a, if you notice over here, this is a swing point that the market penetrated. So that was my target. So I was happy with that. Now what I'm looking for the market to come back down so I can look for a buying opportunity. And again, I'm looking for some candlestick pattern at a pivot point, or maybe not a pivot point, but a Fibonacci level. So I take my Fibonacci tool, draw from the swing low to the swing high, and here's 61, 50% retracement level. These are the levels that I would like to see the market come back down to, give me a color change candle, maybe an inside bar or a spinning top, and I'd be looking to trade. But I'm getting away from what I started to talk about, and that was just strictly candlestick pattern. So right now, yes, inside bar, here was the entry, exits down here. So let's look at some more trade setups. Okay, here's an inside bar. Market sold off for an entire day, and it printed a inside bar. An inside bar is a reversal pattern. When there's body of the candle that closes inside the previous candle, normally that is a reversal pattern. The next candle should close above this inside bar, and that's your entry. That would be your buy signal, and the market rallied for about 50 pips. The other thing I look for is stochastics being oversold. Okay, let me just spread this out so you can see stochastics was down at this level. Let me change the setting. I need to change the settings on stochastics because I usually use 14, 3, and 3. Okay. So that's it. That's stochastics is down at 20. We have an inside bar. Take a trade, and you're in profit on this trade. Okay. So a few things I look for. First, let me just get rid of MACD indicator because it's not I'm not going to be using that for this tutorial. I'm looking for three things to happen. First, stochastics being overbought, oversold, and I'm looking for a candlestick pattern. Okay, here again the market rallied, and at the end of the day, this is about after 11 o'clock Eastern, close of the European session, and we have a bearish engulfing candle. Notice that this red candle engulfs the previous candle, and stochastics indicator is overbought. So that's the trade signal, and it also happens to be a previous resistance or previous support turned resistance. See how the day before the market found support but broke that support, so this is no longer a support level. This becomes a resistance, and the market went back up, retest this as level of support, but now it's resistance, and the market rallied, or rather sold off. Okay. Again, stochastics is overbought. We have a bearish engulfing candle at a previous resistance and a previous support, turn resistance, and we have a nice trade to the downside. Here we have an inside bar again. Notice that this candle is completely inside the previous. The body of the candle must be inside. Now, it's important that you look to see where the market has been before, and the market had, for 2 days it's sold off for about 195 pips. That's important because you don't really want to take a trade unless the market has completely sold off or rallied. So it gives you an idea how much money you can make to the upside on a retracement. And the market sold off for what? 200 pips. I should be able to get at least 50 pips to the upside of the market sold off 200 pips. So I look for stochastics to be oversold. I look for my reversal candle, inside bar, check. Notice that the market came back down to 50%. Okay, there's your 50% retracement before it rallied. And this is very common, especially when you have huge candles. You don't necessarily want to be buying up at these levels. If the candle was small, if the body of the candle was small and closed down here, then yes, most likely I would have taken this trade. But look how long this candle is. It's about, what, about, oh, I clicked on the wrong thing there. Okay, we have 129.89 to, that's about 60 pips before the market turned around. Okay, let's look at some other pairs. Here's another trade setup on pound Canadian dollar. Market rallied today, and then here's after 11 o'clock Eastern. We have a nice inside bar color change and an inside bar, and stochastics is overbought, and this is a trade that was taken around here, and we're still in this trade, and hopefully it will come back down to a 50% fib level. Here's another trade setup down here where we have an inside bar and we have a nice divergence setup on stochastics. Inside bar, we also have a trend line break, and this actually turned out to be a nice morning star. And we have one candle down and then a wick, and then the other candle closes up higher, making this a nice reversal pattern at a previous support level, and there's your nice trade. Okay. Here's again, it's a good setup. This is the Aussie dollar. After the close of the European session, again, we need stochastics to be overbought, and we need a candlestick pattern. It doesn't really get any better than this. You've got the market rallied, so the first thing I did is count the number of pips from the swing low to the swing high. The daily range on the Aussie dollar is about 80 pips, and the market put in about 146. So I feel confident selling up here, knowing that the Aussie dollar has exceeded its daily range. Stochastics indicator is overbought, and all I need to do is wait for this bearish engulfing candle to close to confirm a reversal pattern, and then take my trade on the next candle right here. And it retraced about 55 pips. Okay. Now exits, they're a little tricky. What I probably would have done in this trade is just take my Fibonacci tool and drive from the swing low to the swing high, and I'd be looking to exit at fib levels. Here's one exit here at 23%. Here's another one at 38%, and then the market went all the way down to 50% before it went back up. Once again, we have on USD yen, market rallied here. We have a bearish engulfing candle, and we also have divergence on stochastics. So a combination of divergence, bearish engulfing candle, the market, this pair managed to put in about 190 pips from the swing low to the swing high, and 100 pips is about the daily range on the USD yen, and also happened to be a previous resistance level. So the combination of a previous resistance level and a candlestick pattern, which is a bearish engulfing, and stochastics overbought, and in this case a divergence setup, this is a very classic reversal, or rather retracement pattern, just using candlestick patterns, previous support or resistance level in this case, and stochastics indicator. You can also throw in divergence, or rather, I'm sorry, trend line if you want to wait for. But then again, if you wait for a trend line break, even though you see this beautiful bearish engulfing candle when the market's overbought, then you're going to lose out on at least 10 or 20 pips at times, and then you stop, then your risk is higher. But if you just take the trade based on the candlestick pattern, the candlestick reversal pattern, and just make sure the stochastics is overbought, then your stop loss is minimal. Okay. Again, just look for inside bars. Here's one there, stochastics oversold, the market rallies. Here's an inside bar. Market's not quite overbought, but it still qualifies because it's at a previous resistance level, and the market sells off. And it's in an overall downtrend. This is just a retracement. Okay. Okay, so let's look at previous support levels. Here's the support, and we have an inside bar here at a previous support. We have an inside bar here at a previous support. Here the market, the stochastics indicator was oversold. Here we have a bearish engulfing candle at a previous resistance level. Stochastics is overbought. And these are short scalping opportunities. We're just looking for 20 to 30 or 40 pips at times. No more than that. I certainly don't stay in these trades for more than 2 or 3 hours, because when you trade off the 1 hour chart, you're not looking for a directional bias. What you're looking for is the oscillation. You're looking for the markets bouncing off support and resistance all day long. And the safest trades is taking them in the direction of the overall trend, but there's always trades to take at support and resistance levels. Okay, so that's it for this tutorial. I will be continuing updating the price action video series. If you have any questions, just send me an email. Have a good trading week. Thanks for watching.